down. Doesn't mean you'll see the swing low again. So $5.50 is a good premium because it closed at 1260. That was the big gap down. The market makers walked away and stole all the premium and bought it. They got big interest to have Google go back up in value to take these calls up for the market makers. Set me an alarm. Here, I'm recording it. Google is printing 582. We undercut it. Here's a 3-minute chart. If buyers move in, I'm going to pop that call contract right here. We already had a couple of our senior traders trade in and out of them only because of the amount. You know, they had to do something off of that big gap down, but they, you know, if they got stuck in it a little bit, it wouldn't have hurt them anyways. Yeah, they would be given profits back, but they wouldn't be losing any principal. So let's see how we set up here. Brian Plain, get ready to pop me some contracts. Buy 3 contracts right now. Bid them at $7 on 3. Bid them at $7. And then hurry it up. Bid them at 7. They're 680 by 710. Bid them at 7. Make them throw it off. Take the other side of the bid out. Take that bid out. Okay? They threw off to you. Okay? Now, the deal is we're going to set it up. We got to break it out. We are in that. The 580 strike price. Remember that the low was a big gap down news-related event. So what we're going to look for is 586 was a high, and stick right there with it. Okay? And now we'll watch how it sets up. This is a 3-minute chart. Here's a 15-minute chart. That's a support level. And as long as we can base above it, we got below it, we came up above it on a 15. If we can base here and we can set up the turn here, we're in good shape. They got more to gain by taking that call higher. That 580 strike is the new key strike for the rest of today, Thursday and Friday's expiration on Google. Let me tell you, that is the key strike. That 570 and 580 are key. The 570 was in the money call. That was the big drop down on news-related with Baidu. This is what they need to do now is break the swing high. Okay? So we've got 2 underlining issues for expiration that we can be very aggressive on. We know what it's going to be. We will do it intraday. We bought a lot of the February contracts across the board. This morning when I gave out all the limit orders. I gave out a whole bunch of limit orders starting at 570, 580, 590, and 600 call strike for not the next 2 days, but for the earnings pop come February. We are not, and we are going to go into a big earnings report on January 21 with Google being affected by news, and they have dropped the price way down. And I had a lot of traders buy all strike prices for February that have already made, so guys that have already made $200,000 to $400,000 on Google in the year 2009, I've let them take some of those profits, and I've let them throw them back there in those strike prices. Where people in the school here, they haven't even got that luxury yet, but they're going to get it. And that's how that particular trade sets up.